Hey everybody, what's going on? It is James here with Crypto Common Sense, and I wanted to sit down today, July the 3rd, and shoot a market update video because we did indeed have a monthly close a couple of days ago, so this would be a great time to do this video. Before I jump into the content, please do me a huge favor, hit the thumbs up button, subscribe to the channel, and make sure you click that bell icon to get notifications when I release new updates. Also, you can check the description for links where you can join my trading course if you'd like to learn how to trade. You can also check out my trading indicators for TradingView, which do most of the heavy lifting for you when it comes to technical analysis, and then simply spit out buy and sell alerts. So let's jump into the charts. One of the main reasons I wanted to do this is because, again, there was a monthly candle close. So let's go ahead and start off with a monthly chart of Bitcoin, and then we'll kind of work through the different time frames and talk about some of the bigger picture stuff, how the stock market affects all this, all those good things. So first things first, let's pull up the monthly Bitcoin chart. By the way, I haven't looked at any of this before doing the video. The last week or so have been pretty busy with the business side. I finally started a quote unquote new business in June of 2022, about a month ago. That business is of course the indicators for TradingView. So I have been trading for the bulk of my income for the last 4 years or so, trading for 5 years, but for the bulk of my income for about 4 years, training and teaching on the side as a hobby, and I finally decided to build a real business out of it, and so I'll be doing a lot of that going forward, doing some real marketing and all that kind of stuff. But for those of you wondering, yes, I will still be trading, because why not, right? It's a great opportunity and there's money to be had. So this is a monthly Bitcoin chart. First time I'm looking at this, I'll look at it with you. We can talk about some of the things that are happening. So first things first, we were obviously in this range that was ranging up, kind of a parallel channel type of deal. We did break out of it. We talked about that a few months ago. That was in May. Once we got that monthly close out at the side of that channel, we've just been moving down since then. Now we have had 3 monthly red candles, and there's something interesting about that, the fact that normally speaking, that's about all you get, even in a bear market, unless it's in the capitulation phases. So let's talk about that a little bit. Let's look at just price for a second. If you notice, in the summer of 2021, when I first started really sounding the alarm that we were in heavy distribution, right, we had 3 red candles. Then we had our dead cat bounce, which actually took out the previous high. 3 red candles, another dead cat bounce, 3 red candles. So I would be somewhat surprised if June ends up being another red month. Or if it is a red month, I would expect it to be maybe a small kind of inside candle type of candlestick. It would be odd to be something else, but I'll talk about why that might be possible here in just a few minutes. If you look back in 2019, 3 red candles, then the dead cat bounce. Look back in 2018 during the bear market. The only time there was 3 candles was during the capitulation phase at the tail end of the bear market. And of course, this is a Coinbase chart, so it only goes back to 2015, but you can see, again, 3 red candles back here in 2015 and then green. So, the one thing that I really want to be careful of, and I want everybody to be careful of, is comparing this to past markets and expecting the same thing to happen just because that's what happened before. Now, that sounds strange because technical analysis is literally based on, what happened before. And I have been fairly successful using past market behavior and past market cycles to predict current cycles and future cycles. But oddly enough, this time, it really is different. And the reason this time is different is because this will be the first time ever that Bitcoin is going through a bear market at the same time equities are going through a bear market. We have never had that before. Bitcoin has only existed during a global bull market. And so we really don't know what to expect. And I think it's very dangerous to automatically assume that this bear market will be just like past bear markets. I'm just throwing that out as a warning. If we go back to the regular technical analysis, of course, we can see that our point of control in this Coinbase chart, it's actually down around 12 to 1500 bucks. So that would be, a pretty significant drop to get all the way down there. We do have a volume gap down here around 3K. And of course, we have that big ledge of support that I've been talking about for over a year now, saying that I thought we would go back to at least $8,000 to $12,000. And I still believe firmly that we will reach those levels. That's not a guarantee. I do not have a crystal ball. I'm just saying, me personally, that's where I believe Bitcoin will get to bare minimum. I just don't think it's going to get there right away. I still think we have a dead cat bounce, which we're going to talk about next. So let's look at a weekly chart. We'll look at the Wyckoff version of this. This is, of course, the Wyckoff chart that I posted up several months back in January, maybe February. I posted this chart up. Of course, this is what the distribution looks like. I had it all mocked up. This was the upthrust. This here was the last point of supply. We had our breakdown. We bounced back up. We had our last point of supply, and we broke down even further. I would say at this point we're probably entering into, and this is up for debate, it could be that this was actually the second SAL or second sign of weakness. So we actually are just now in this part, like through here. We could also be, and I think it's more likely, that we're probably over in this area here, and that we still have this bounce to go, that we're actually in phase E, that we have some kind of dead cat bounce, and then the final capitulation event. So that's kind of what I'm watching on the Wyckoff chart on the weekly time frames. Again, I think right now it makes more sense, to maybe chill out on short-term bearish plays, because you do see that Bitcoin is oversold on a weekly chart. And if you notice, even in 2018, that didn't happen. It just kind of tiptoed down there and then bounced right out. So we are in this new unheard of territory where Bitcoin is oversold. We do have a couple of really big red volume candles here. So those are signs of potential capitulation. I don't think it's full capitulation. We don't have any buyers really stepping up, so I can't really get bullish. But I also just think maybe most of the bearish move has played out. We probably need to wait for some kind of counter move before I personally look to opening new bearish positions. If we open up a chart, I don't want to look at too many Bitcoin charts, but let's look at a 3-day Bitcoin chart. Again, we're sitting here ranging in the oversold area. That's not an area that I'd like to look for new short positions. If it was just tiptoeing into it, a lot of times the first break into oversold or the first break into overbought, those are actually really strong signs that the market has momentum behind it, and they'll often keep going in that direction. So for example, when it broke into overbought back here, that was actually a bullish thing, not bearish. When it broke into oversold here, that was actually a bearish thing, not bullish. And so for example, if you started looking for shorts back here, there was a washout, but then that big move down. But once you start ranging in those areas, it's really, really dangerous to come late to the party. All right. So again, even on this 3-day chart, and again, I haven't looked at these charts in a few weeks, almost a month now, because I've been focused on the software side, getting the new software business off the ground. And this is what I had drawn up. I just now noticed that. I had drawn up for some kind of bounce. We didn't get much of a bounce, right? Only got a bounce of about 32K. I was hoping for 35 to 40K, and then that puked down. Instead, we got a little baby bounce, and then the puke down. So it did puke down, which is great, but it never did go up high enough for me to get into additional short positions, which is a bit of a bummer. If we jump back over to just a regular weekly chart without the Wyckoff on it, so it's not quite so cluttered, we can take a look at our 19. Oh, this does have Wyckoff on it. Well, son of a gun, what did I do? Put it everywhere? All right, so there's the Wyckoff there where I had drawn up. This was a few months after the original, where I had added some stuff to the chart. So there's the SAL, there's the last point of supply bounce, there's the puke down. So again, this is showing that we're right here with one more bounce to go, and then the capitulation event where the market finally returns to its mean. If you look at the white trend line, that's down around like 8 to 10K, and of course the longer term yellow trend line is down a little bit further, around 5 to 6K. So those are potential targets, of course. Our 19-week moving average is now curling down in a big way. It's sitting at around $34,233. So a bit of a bummer that we never got that beautiful retest. This was probably the retest here, but it went above it, which made it hard to short there. It's basically like an M now, or a double top on that, which has never happened before. So that's definitely not great to have a double top on your moving average. So yeah, not good. And unless the market can reclaim the 19-week moving average, it's very, very hard to be bullish on Bitcoin long term until that first happens. If we take a look at the 200-week moving average, this was the moving average Bitcoin has always bounced off of. I did a video a week or 2 weeks back saying, look, be careful thinking this is like every other time, because again, this time is different. Equities are in bear markets, yada, yada, yada. and it's very likely that that will not hold. It did not hold. It closed underneath it on the first candle, the second week closed underneath it, and we're still sitting underneath it right now with less than 24 hours to go before this weekly close. So the problem is, with all technical analysis, when a zone of support flips to when you break through it and close underneath it, it flips to resistance, right? So you have support, otherwise known as demand, flipping to resistance, otherwise known as supply. So it's very possible there will be people who start looking to exit positions when we get a retest of that level. We have to now reclaim that level before we can even start talking about the 19-week moving average. Bit of a bummer. So let's look at one more Bitcoin chart. This will be the Bitcoin daily chart, and it's probably been at least 2 weeks since I've looked at this particular chart. So let's see what's going on here. So this is, of course, look at that. This is, of course, the indicator, which is, I did not plan on doing this, but this is the indicator that I was talking about, that I've been working on. You can see it gave us a buy signal back here in May of 2020, and then a sell signal right here in November of 2021. So that was absolutely beautiful. But let's turn that off because that's not what this video is about. And let's turn off RSI. Let's turn off volume for now. Let's turn off all these moving averages and just look at price action. So we had obviously a bear flag. Flag comes down, makes its, flag here, and then, the additional breakdown. The way these work, they're A, B, C moves, and you typically will get a measured move, right? Which I talked about before it happened. I said as soon as it broke out to look for this, right? You get a move that comes down like this, it bounces up, and then you have your target. Again, that target's down around $12,000. So we are moving steadily toward that target. The 50 moving average is, of course, a line in the sand. It's sitting around $25,000. We'll call it $26,000 roughly. The 200-day moving average is way up at 37.5. So, of course, we had our death cross back here. Again, double top on the 50, curling down 200. Those are all indicators of bear markets. Okay. So that's that. And one more, I think I keep saying this, I'm sorry. One more Bitcoin chart and then we'll move on. This is the CME, or the Chicago Mercantile Exchange. What I would say on this is the same thing I've been saying to others. I would not be looking for new short positions right now. I still think a bounce is due, and then more downside after that. Again, there's the bear flag. That's the original bear flag that I had drawn up, showing that we had a target down around 12K. We did come down and fill in this gap. This gap was made back in 2020. It's been filled in. We came down and filled in this gap. I believe we're very close to it. This gap was also made in 2020, but we still do have this gap down here around $9,600, which I firmly believe will be filled in before this is all said and done. And yeah, so that's the CME chart. So what else should we talk about? Well, I believe that the next thing we really need to talk about is going to be the RUA, right? The RUA being, of course, the Russell Index. Got about 3,000 or so stocks on it. It's a pretty good indicator of the stock market itself, put it on a weekly chart. I posted plenty of things up, which we've talked about in past videos, showing that this was indeed bearish. Chair's getting awful squeaky. I think we'll have to break down and buy a new one. It's so comfortable. I hate to do that though. But I posted charts up showing that this was a textbook double top. You can find them in the Facebook group. If you're not a member of the Facebook group, feel free to come join. But basically right here is the short. This was a textbook short. Was coming back up to retest that. Was leaving behind that beautiful wick. Basically, a doji candle. I call them lightsabers. I've never actually seen Star Wars. Star Wars is kind of like pop culture. So I do know what a lightsaber looks like. And that's kind of like a lightsaber to me. Or maybe like an Excalibur sword. I can't talk because I'm a bit of a nerd and I like knights. So, again, somebody could have went short there and then rode this down, would have been a beautiful short, maybe even 10-to-1 return to risk. But same thing as with crypto. I think this has moved too far, too fast. This looks primed for some kind of counter trend rally, especially with this candle right here leaving behind this big tail. It looks like there is demand or buyers who are wanting to step up. So, I believe that we could have a green month in the stock market. Now, anything's possible, right? I'm not saying that the bear market is over. I think that would be a bit far-fetched. I just think it's went a little too far, too fast. And, markets don't move in straight lines. So that's something that I would be very aware of. If we do get some relief in the stock market, then a lot of times crypto people overreact to that news, they start getting super bullish, and we could see a really nice bounce in crypto. In 2018, during that bear market, we did see a couple of bounces. One was over 100% on Bitcoin in just a few weeks. Of course, then it went lower, but those bounces are really good places to look for short positions. As the cliche goes, in a bull market, you buy the dip, and in a bear market, you sell the rip. All right, so this does look prime for a bounce to me. We have some long-running bullish divergence. You can see the price making lower lows while RSI is making higher lows. I am short-term more bullish than bearish on these markets, and then I will look for more downside after that plays out. All right, one last chart we can take a peek at, and that's going to be the market cycle chart. This is the market cycle chart that I posted up. Oh, I don't know when. Last year in November, I believe, is when I posted this up. In fact, now that I think about it, I know it's when I posted it up. People thought I had lost my mind, right? Because I was saying, look, this is another bubble, and we're, in complacency, which we were in complacency, and that's how that's looking right now. This is Bitcoin versus the QQQ. So this is Bitcoin versus tech stocks, right? Because I personally believe that Bitcoin is nothing but another tech asset. And so it was, you had the whole tech market in a bubble, and then you have Bitcoin in a bubble versus a bubble, which is even crazier. So that was complacency. We came down. We had an anxiety bounce, which I think is right here. We had this move down. I personally think that was this leg right. Oops, come on. Right there. And I think, like I keep saying, I think we have a counter trend rally coming. I think it'll be the denial bounce. It could be a good one. Maybe all the way back up to this zone even. And then I think we get our puke down, our panic/capitulation, and finally our sideways grind where we can start looking to accumulate new positions. All right, that is what I am looking at. I am 99.9% sure that's what's happening. Okay, and if I sound overconfident, I'm not trying to be. I'm just telling you, like, with conviction, that is what I believe is happening. I am not, a guy that I know a lot of marketers especially are saying, buy the dip, buy the dip. Listen, that's because they heard that somewhere. They don't know what they're talking about. And I'm not saying they're wrong. I'm not saying it can't go back up, but they don't know what they're talking about because you don't have dips in a bear market. You have falling knives. So what they're really saying is buy a falling knife. Sometimes you get lucky and that falling knife turns out to be a great buy, but most of the time you just get your fingers cut off, right? Instead of catching falling knives when you're looking to accumulate long-term positions, what you should look for is, well, shocker, accumulation, right? Accumulation presents itself in a sideways ranging market. Even in 2020, we had a sideways ranging market all the way from March of 2020, right? Or even February of 2020, where it was up around this level. It ranged sideways until it finally broke out 8 months later in October of 2020. This is accumulation. This is a falling knife. All right. Cathie Wood would be a great expert you could talk to on falling knives. She seems to love catching those things with both hands. Of course, that's probably why her fund is down nearly 80% over the last 12 to 18 months. In fact, let's go take a look at Cathie Wood and see how her fund is actually doing. I said one more chart. Here I go, looking at more charts. So here's the ARK fund. It's obviously done very well the last year. Note the sarcasm there. It's down, fell about 78%, currently sitting down about 74%. So the great thing about markets, though, is, even though this is down and people, it's funny, the media, they're terrible because they were pushing Cathie Wood when she was telling people to buy up here. They just kept running article after article about how great she was and how smart she was. And, now that her fund is down, the media is kind of starting to turn on her. And I think it's a bit ridiculous because while I'm not a fan of Cathie Wood, the media were the ones publishing that crap. The media were the ones that were getting people to buy, not Cathie Wood. They just, she was the one that was, talking, but they're the ones giving her the soapbox to stand on. And they don't want to take any responsibility for it. They want to act like it was just her. But the reality is now that the media is turning on her and saying that, maybe she's not as great as they said she was, it's kind of a weird place to do that because in reality, her fund is now retesting the same accumulation range that it went through those last 3 years before the breakout. So I'm not saying that you should go out and buy ARK, but what I am saying is if I had to buy ARK, if somebody put a gun to my head and said, you buy ARK, well, I'd much rather be buying down here than I would have back here where the media loved Cathie Wood. Now they hate Cathie Wood. It's kind of ironic, isn't it? Right? By the time they give up on her is by the time that maybe I want to take a look at her fund. Kind of like Bitcoin back in 2018, those goofballs at one of those big media outlets had a funeral for Bitcoin in 2018, right around $3,000 if I remember right. Yet a year earlier, they were telling people, they did a whole segment showing people how to buy Ripple when it was almost $4, right? So they were telling people how to buy at the top and having funerals for Bitcoin right near the bottom. So the media, they're a bunch of jokes, right? Don't ever get your investment advice from media outlets. It's a complete and utter joke. It's a great way to lose a lot of money. So that's kind of ARK. Is there any other individual stocks we might want to look at? What's another big one? Tesla. I haven't looked at Tesla in quite a while. Let's take a look at Tesla. Where's Tesla? It's going to be on my blue list. The blue list, by the way, if you're wondering, it's just a list of pretty volatile stocks that I like to trade. There's nothing special about them other than that. So that's Tesla. Still looks pretty bad. It's still high up there. But just like all the other stuff, most stocks have some kind of correlation to the market as a whole. So if the market as a whole has a bounce, I would expect Tesla could also have a bounce. That's a monthly chart. There's a weekly chart. It doesn't look great. It's probably not one that I'll mess around with. You have a downward channel, something like this. I don't even know where, if it does bounce, I don't even really know where I would expect it to bounce to. Usually I have a pretty clear line, like, okay, this is where I think it's going. That's pretty messy, right? All of this to me, when I look at Tesla, all of this just looks like a bunch of chop. I really don't want to get mixed up in that fight at all. So I would personally avoid that one. That's just me. All right, so we've taken a look at quite a few charts. The main thing to remember with all of this is the media jumps on whatever the public is already feeling. So if the public is feeling a lot of greed and FOMO, the media will run articles that are, feeding into that because that's going to drive the most clicks. And when you're in a market where, it's pure fear, well, the media is going to run with those narratives where they run nothing but negative news. And so what happens is you see nothing but negative news, and because you're seeing only negative news, you start getting ultra bearish, when in reality, it's probably sometimes the worst time to get bearish is when the media is telling you to get bearish. Again, I personally believe that we're probably going to see some type of counter trend rally sooner rather than later, but I do feel like we have a lot further to go. All right, a lot further. And that goes for all the markets, but especially when it comes to Bitcoin, like I've said in the past, if we jump back over to the Bitcoin cycle chart, what I personally believe is going to happen with Bitcoin is I personally believe we will see it go back down and retest this level through here, kind of this range. Okay, and this is versus the QQQ. So I think Bitcoin will have a bounce. Where'd my brush go? I think it'll have some kind of denial bounce, and then it's panic and capitulation, do something like this, eventually make its way down to this level, and that's going to be at about 32 shares of QQQ to one Bitcoin. But I think QQQ itself could drop a lot further, so it really just depends on what those shares are worth before we can try and pick what Bitcoin will be worth. Ideally, and this is the ideal situation, I'm not saying this is what's going to happen, but ideally, what we'll see Bitcoin fall down to maybe around $3,000. Okay, 8 to 12,000 is kind of what happens if the stock market, recovers faster than people expect, and this ends up being just a run-of-the-mill bear market in Bitcoin. That would be like the $8 to $12,000 range. But if I can find my monthly chart here, did I close it? No. If the stock market does continue selling off after some kind of bounce, then I think it's very likely what we'll do is we'll actually end up going down here and filling in this volume gap right here and probably find support in that zone. That's what I personally believe. There are going to be a lot of people, in my opinion, who have bids sitting down on this wick or this tail right here, and they're going to have orders all sitting through there. I think we'll see demand if it does, have its denial bounce and then come down there. I think that's where the market will end up ranging, fill in this gap, and probably start to move back up from there. Now, I don't want to get too macro with this, but I don't personally believe that this is just another market cycle right now. This could change, right? I'm not saying I'm married to this opinion, but right now I have a hard time believing that Bitcoin will surpass its previous all-time high because its narrative has been busted. right? The narrative that it was a form of money early on, well, that's been exposed for a long time. People realize it's not efficient enough to be a form of money. And so they moved over to the store of value narrative. Well, that's now been exposed as well. It's absolutely collapsed in the face of stock market troubles. It did not hold value in the face of inflation. It didn't do anything that the guru said it was going to do. And so I don't really see a whole lot of reason that new investors would want to rush in and push this to new all-time highs. I do see a reason that diehard crypto fans and also crypto people who are speculating on a new all-time high, I see reasons that they will rush in and buy during this gap, which will, if that happens, it will send Bitcoin back up. How high is the real question, right? Does it get another media frenzy? Does a new narrative, kind of come out where it can, go even higher? Or maybe does it come back up and just kind of retest this old zones somewhere between 30 and 40,000 and then eventually just kind of peter out and people move on to the next best thing, right? The next crypto that's kind of stolen the spotlight, whatever that may end up being. So overall, I guess the sky is not falling, first of all. This is just a market cycle. It may be a little bit deeper than previous market cycles because everything's happening at once, but it is a market cycle, and markets, they always return to their mean. When I was saying this during the bull market, nobody wanted to hear it. Well, most people didn't want to hear it. They didn't want to hear that a market returns to its mean. But the same thing is true in a bear market. When this gets overextended and when this goes too far south, eventually it will also, I'm talking about the market as a whole, not one specific asset, but eventually the market will return to its mean. So just keep that in mind, right? There's opportunity. And the biggest opportunities, look at this chart here. This is a chart that I posted in December of last year. The maximum point of financial opportunity is actually in the bottom of a bear market. The point of maximum financial risk is at the top of a bull market. The euphoria phase is where you're doing the absolute most harm to yourself by investing. It's when everyone else has given up and capitulated, which we haven't seen yet. That's when you got to start looking for positions, when the people are despondent, when you're starting to hear about, unfortunately suicides and things like that on a regular basis. Those are good signs of a market bottom. Not happy signs, but we're just talking in facts right now. So keep that in mind, right? And not just for when you're buying bottoms and looking for accumulation zones, but the next time there's a big bull market, keep in mind that euphoria is where you need to be looking at taking profits, not adding to your stack. Michael Saylor, I am not a fan of his because he refuses to admit he's wrong and he continues to lead people off a cliff. And I think he knows he's wrong. I'll talk about this real quickly and we'll take a look at his chart. If you look at MicroStrategy, I saw this tweet and I retweeted it the other day. It was a very mean tweet and I reposted it even on my Facebook, but it's just the reality of it. If you look at Michael Saylor, somebody was saying that he could be possibly the worst investor of all time. He lost more money. I don't know if this is true. I know he lost a lot of money. He lost more money than anyone else in the dot-com crash. Now he's underwater over $1 billion in the best performing asset of all time because he timed it wrong and bought the top of leverage. Here's my problem with Michael Saylor. He is buying little bitty bits of Bitcoin and hoping to trick other people or convince other people to buy. People are saying, well, he just bought $10 million worth. Yeah, but that's on a $4 billion investment. That's literally less than 1%. So that would be the equivalent of somebody putting in, say, 100,000 in Bitcoin last year, and now they're going out and putting in like $400, right? They're adding $400 to their $100,000 investment. That's not a show of commitment or, anything like that. That's simply a show for, hey, maybe I can trick the sheep to come buy some Bitcoin and hopefully turn this thing around, or maybe even raise it up enough that I can get out of this position for a break even or, smaller loss or whatever. Last I heard, they had about $4 billion invested, and I think they were down about $1.5 billion in that investment. Absolutely horrific investing, right? And somebody tried to argue earlier with me that he's actually the greatest investor of all time. No, that's not great investing. Even if that investment eventually works out, all that is gambling. That is no different from a really bad poker player knowing that they're probably losing the hand, but they keep throwing more and more and more money in the pot, hoping that they eventually get the right card and suck out on the other player. That's the term for it, when you suck out on somebody and you put a bad beat on them, right? When I used to play poker for a living, that used to drive me nuts when somebody would put a bad beat on me and then brag about it like they were smart or intelligent. It's like, no, you're what we called a luck box, right? You got lucky and won the hand. Congratulations, you won one hand, but 99 times out of 100, when you do that, you're going to lose all your money. Well, that's the same thing with these people who just keep throwing money at Bitcoin, right? They're not great investors. They're gamblers. That's what they're doing, is they're gambling, hoping that eventually it goes back up and it ends up turning into a winning bet, right? They're not trading, they're betting. Very different things. And in some cases, they're betting with other people's money, which is even more ridiculous. So I will go ahead and wrap the video up there. Again, make sure you check the description. There are links down there where you can learn to trade, so you can, take advantage of these markets and learn to navigate the markets for maximum financial gain. And also there will be links down there where you can purchase a subscription to my TradingView indicators, which do a lot of the heavy lifting for you and simply spit out buy and sell signals based on technical analysis. As always, remember, I am just some guy. I'm sitting in a spare bedroom at 3 o'clock in the morning right now, or 3:30 in the morning. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed the video, give it a thumbs up, subscribe to the channel, hit that bell icon to get notifications, and as always, please remember to trade safe.